Good morning, this is Connor from 0DTE Traders here to present our market minute for July 16th, 2024. It is 10:30 and the SPX is trading higher, up 0.3% to 56.47. Qs are on the back burner, down 0.2%, while IWM is up 1.7%. So we continue to see that rotation out of growth momentum into small caps and value, which is not great for the bulls because generally when growth mega caps underperform, it limits upside potential. So if you're a bull at this juncture, you want to see these mega cap names go red to green. Additionally, volatility could be an exacerbating factor today with VIX expiration tomorrow morning. There may be incentive to crush vol. This was kind of my base case going into today, although this clearly has not played out thus far. In terms of resistance, or what you can kind of say as a pivot perhaps, is that 5650 zone. This is also ES 5700. A break opens the door to the all-time high, which was printed in yesterday's session at 5666, and then 5675 gamma resistance. So this is kind of a strong resistance zone here. Also, the implied high is up in this region as well, 5676, with the implied low down at 55.86. That is a 0.8% implied move today. As far as support on the downside, gap fill is yesterday's closing price, 56.31, followed by support at 56.25, and then the big 5600 handle and our flip, the transitional strike at 55.95. So levels are really unchanged from yesterday. Now, Friday is monthly option expiration, and this is something we track quite closely and classify into two regimes: call-weighted expirations and put-weighted expirations. Friday is call-weighted, simply meaning there are more calls expiring than puts, and oftentimes we see very similar characteristics in the final week of an option expiration cycle, as well as the week following option expiration itself. So I just want to fire off some quick points here. First off, during a call-weighted cycle, the market typically exhibits a positive or flat trend in the final week of option expiration this week. And this is because the elevated growing positive gamma from calls supports the market. And this leads to dealers buying dips, selling rips in large quantities, which essentially kills volatility. With that said, the natural course is for the market to hold up and implied volatility to compress. Hence why we're talking about the possibility of VIX crush today. Now, once option expiration happens, you get a removal of a lot of these flows, and that could be around 20 to 40%. And essentially, this reduction weakens support and resistance levels and kind of unpins volatility. And this is generally known as like the gamma unclench, vol unpinning, window of weakness. There's a lot of terminology, but the point is, once option expiration happens, so that would be Monday starting next week, the market is more prone to weakness because that support has diminished. This is the SPX chart on the daily, and we have marked the monthly option expiration, and you can see the common characteristics. The market holds up into option expiration and then just flat post-op X. Market runs up into option expiration, flat post-op X. The market runs up into expiration, flat post-op X, and same thing here. Now, of course, this doesn't always work out as such, but this is a common pattern. Now, a put-weighted cycle we didn't discuss, but it tends to be the opposite. And those put-weighted cycles, so the OPEX itself tends to be the pivot and often correlates with the local low, and then a rebound in that week following OPEX. Perhaps that's a video for another time when we do have a put-weighted cycle. Anyways, I wouldn't be trading this blindly, but these are common patterns and is definitely something we track and we find a substantial edge when it comes to 0DTE trading. Now, if you're not a member and you're interested in learning more, you can visit our website at 0DTEtraders.com. Best of luck out there today.